Is Saylor wrong about Bitcoin and how he develops his companies? Might he actually be bad for Bitcoin? Maybe strategy is doomed? Maybe the focus on big Bitcoin, the treasury companies and the TradFi system is too big and we're losing the focus on what's really important in Bitcoin, the peer-to-peer electronic cash, the sovereignty aspect, decentralization and security aspect? I certainly don't think so. But today, Pius Sprenger, one of my favorite guests on the show, brings amazing insights into not only how the banking system back in the day worked and why it all collapsed, but also what he now sees with the Bitcoin treasury companies and what he thinks is wrong with it, and why, despite of Saylor's strategy, Bitcoin is stronger than ever, especially if you have a DCA plan. And we're going into all the graphs. We also compare Bitcoin, the 10,000 Bitcoin for 2 pizzas, and now you have one super tank of oil for 26 Bitcoin. So it was a lot of fun talking with Pius. We talked about Saylor's strategy, we talked about Bitcoin DCA, we covered it all. So enjoy. How do you look at strategy, BlackRock, all the Bitcoin treasury companies, all the preferred stocks of them, taking away purchasing power that otherwise might have come into the Bitcoin ecosystem directly in form of self-custody Bitcoin?
I cannot really now prove it. I wouldn't really make the, it's more my sort of like thinking and reflecting. And by the way, going a bit into Michael Saylor journey. The minute is when you have something which is not in like on Wall Street. Suddenly it's like as something you have in a wallet, or maybe you use spending amongst friends and you buy something. That's sort of like you cannot really build derivatives on back of that. No, you can, and so like trading, but it's not really that interesting. What Michael Saylor did and all the other Bitcoin treasury companies, and to a certain extent BlackRock as well with ETF, that created financial products. And the idea, I get it, was like, how do we get actually in a very simple way guys who are not really into Bitcoin and who really don't really want to have a wallet and everything, how can we get them into Bitcoin? But I think it's important as well, if you're in Bitcoin, the mindset. Most people who invest in a BlackRock product like EBIT, an ETF, or into MicroStrategy, do that in order to make money. Very simple. If you invest in stock, you want to make money. And you will say, and now you have the following situation. EBIT got launched 2024, I think February, if I remember correctly. And I've seen it somewhere. I didn't really run it myself, which maybe I should do as well. The average cost, Robin, of the investor invested in Bitcoin in EBIT is around $86,000 per Bitcoin. Now they're like at $64,000. They say, gee, I thought this is a product that make a lot of money. I'm up with like Nasdaq, I'm at triple Q, I'm up with the S&P 500, I'm up with any stuff here, but this thing I'm down. Because they only look at the wonderful, and if you have an account as I have with American brokerage firms, they're beautiful, like great, and you see suddenly a statement like, well, there's only one red. This is a freaking thing which people told me that's the best thing ever since sliced bread. I'm too much of a Wall Street guy who knows how these people think. They first of all shoot and then ask questions. They say, this is a piece of shit. This is nothing. It's crap. It's a scheme. It's a Ponzi scheme. And I was stupid enough to invest in it. No. And I think that was one. And Michael Saylor, I think, did it to next level, like really, in my view, the next level. And this is really my case. And I know there are different views. Dangerously sleazy marketing, selling stuff, which definitely is not what it is, money market like product. And I was bearish on that in February, and people made fun of me when I said this stretch thing, that's gonna go down. Now people say, no, it's gonna go up. Like what he does is financial engineering and buying and selling and issuing and back and forth. And of course, people constantly in my team, and they will go, that's gospel. Again, the Bitcoin community has to learn, listen, I got involved in Bitcoin because I think independently, I think freely, and all of us have a different view. And now I see something. Do you actually know the movie Life of Brian? One of my favorites.
Yeah,
I
like my religious teacher in school showed it to me when I was like 16 years old.
It's banned, I think, by the Catholic Church. It's one of my favorite. Pius, a very Catholic name. What can I do with 12 popes? I used to have my name. Actually, I have theirs. So Pope Pio. But he reminds me of, and the Bitcoin community reminds me, stay with me. Whoever knows Monty Python and Live Brian, there's this scene where they take the sandal and walk behind Brian because he's the new messiah. Michael is Brian in the Bitcoin scene when I go to some of the events, and he can say whatever he wants to say. It's being repeatedly in a mindless manner by the Bitcoin guys. We're like, this is shocking. And it reminds me of this wonderful scene where I think he has his night, his sort of like, he seems to be very aroused around Maria and like spends the night with her and then opens the window totally naked and in front of him and the crowds and like, oh, Brian. And like, he's like, oh my God. And then he gives his famous speech where he says, but guys, we're all individuals. And everybody says, yes. And only one says, not me. And that's the Bitcoin scene and Michael Saylor right now. And I find that it's sort of like funny, but I find it very sad as well. And I think we're gonna enter the bull market. It's my prediction. If the Bitcoin community overcomes the Michael Saylor cult status, that's not healthy. And I sort of like don't have anything personal against him. I don't like his products. I don't like his talks. I don't actually like anything he does lately. But here, people are free. But somehow, I think it doesn't serve the community very well, and just very important as well. That to say what is it what Bitcoin should be, and I think coming back to medium of exchange to the idea it should be store of value, absolutely, a unit of account, and building products again, and stretch and MicroStrategy and Bitcoin strategy companies are not products. These are not business models. That's very important. This is financial engineering. I did financial engineering. I did it. And one thing I learned in financial engineering, most of the stuff the world doesn't need. And the most money I made with financial engineering was I shorted, sorry, my friends, the shit out of it. We created it and I shorted it. And that's the whole thing. Now, the sad thing is, Michael Saylor sold most of his product to retail, not really to institutional, especially stretch. If people start losing money with that retail, you create massive damage because they feel like they got betrayed. Bitcoin is not great. Bitcoin is a scam. So pretty much you get a multiplier, but in a very negative way. And because people were told you're going to become rich with being Bitcoin, it's going to be the best thing ever. Well, there's going to be a journey, and you have I think you have Giovanni on your show, you have Stephen Parnott on your show, who talked about the power law, and I absolutely support this, and I think that makes sense. A decentralized network should really perform accordingly to a power law. I think the topology of the network actually seems to indicate power law quite strongly. And Stephen and Giovanni did great research around that. I encourage everyone to study their work. But I think it's important really to use Bitcoin in a more natural way and to talk about it in a very natural way. And you see, I talked about Bitcoin and people got invested at high prices. I feel very bad about that as well. But ultimately, I'm around these guys. I talk to them about that. And I think ultimately it will recover and we will have a great bull run, but it will not come because Michael Saylor and the other treasury companies gonna buy the next 5% of Bitcoin. It will come because people will use it. And now is my prediction. Why do I think it can go much higher? Because now is interesting if Bitcoin were to rally, because it was the first time that it got the attention of a lot of people now, retail market and all that. And a lot of people lost money at that. But now if it really goes high into the 100,000 plus, then people say, oh, there's something to it. So I think, therefore, a rebound from this bear market, Robin, might be the most important rebound for Bitcoin compared to the history, because now it has been in the center of media, even some of the Wall Street guys, and so like it has been now in the center, has disappointed. But I think if something is disappointing and then comes up even stronger, I think that would be a very good argument. So I think this rally is going to define Bitcoin for the long run.
That's really interesting. Like Saylor is a fascinating figure in the Bitcoin ecosystem, because the only thing that confuses me a little bit is like what you said with the cult status, because I've seen that last year when Bitcoin was an all-time high and Strategy, I think, was at the all-time high a little bit before that and fell a little bit earlier than Bitcoin. And especially the Bitcoin Prague last year was crazy to see, because he was almost like a godlike figure that walked around the halls with people. It was different this year in Prague, like 100%. I've seen a lot of people critical about Saylor. He was also not there that much. Like he was more hidden than last year. Probably also has something to do with the stock price of Strategy. But I've seen a lot of hate on him like this year already. I think like last year, like everyone told me last year in the summer to buy Strategy, and I told them like I don't get why I should buy Strategy. It's like, it's a super high valuation. I think it needs, if it ever recovers from that, like a very long period of time to recover from that. And I don't like that, like everyone tells me about it, because it means we're likely on a high cycle, not on a low cycle. Now this year, in the summer, for me, it's like the other way around. It's like Saylor gets a lot. I mean, maybe it's like different. Like Twitter puts us always in a bubble, and we see what we interact with. And if you interact with people that hate on Saylor, you get more people that hate on Saylor. So I don't have like a general analysis on all of Twitter and YouTube comments, but I see a lot of people like really already like being pissed on him, which makes sense because Stretch went down to $70, 71 or something like that. Strategy was what last year at 400 something, and right now it's around $100. It's like people lost a lot of money with it, and so naturally you piss a lot of people off with that. But I don't know. I have this weird feeling he will be the hero again in the next bull run. I might be wrong, but I've seen it the last 6 years. He's the boo man and the villain in every bear market and the hero in every bull market. And that's also what I don't like. He's like the cult, like he's almost like a leader in Bitcoin. It's not a good thing. You should not blame a person for bear market, and you should not celebrate a person for a bull market, because Bitcoin is bigger than Strategy and Saylor, obviously. Like also something like Strategy needs Bitcoin, not the other way around. I think that people confuse that sometimes, like, oh, like because of Strategy we're in a bear market, because of Strategy we're in a bull market. No, like Bitcoin does what it does.
I disagree on that matter. And by the way, I owned Strategy as well for a while. I lost money, by the way, but that's not because I'm pissed with them. Because again, I said before we talk, like if I lose money, I only blame one guy. That's always my attitude. Only myself. It's like, why would I be angry with Michael Saylor? I bought it when I thought there's momentum, because it's a momentum stock and I cannot help myself. And it didn't behave the way I thought it should behave, because Bitcoin went down and this thing even on a leverage base went down. So here, and I took my loss. That's not a thing like just take the loss and move on. And I'm not that doesn't drive my critic here. That's only, as you can only I can only blame one guy for the loss, which is me. So that, but I think with Michael Saylor, there's various points which I very, very critical. Yes, I thought as well, oh, it's a leverage exposure to Bitcoin and could be, nope, it's actually, there's one comparison to that. There is this in Germany, and people say it's not a good comparison. I think the oldest Bitcoin Treasury company, how did anybody know? It's a small one. Is a German listed company called Bitcoin Group SE. They have for the last 10 years almost always the same amount of Bitcoins on the balance sheet, 3,500. Interesting enough, Bitcoin went up more than 50, 60 times since then. And the share price literally unchanged. So, by the way, Bitcoin Treasury, Bitcoin Group SE, for people who don't know that, it's a lot of German Bitcoiners used by the bearish first Bitcoin ever in 2012-13, actually from Bitcoin Group SE. It's actually an operating company where you could buy and sell Bitcoin on a like exchange. It was like an exchange, and it's still operating. It's not making a lot of revenue, but I think 9 million euro revenue. It's not losing money, so it's an operating business. But somehow they decided in 2017-16 not to sell Bitcoin. They have later on Ethereum as well and Bitcoin Cash and so on a bit. And Solana, but it's mainly Bitcoin, 3,500 if I'm not mistaken. And what you see, it went nowhere. Now, there's not a lot of liquidity. It's only 120 million euro market cap. It's tiny. But what I'm saying here is like, and that's again, when you're in a business where this actually, that product here sells at 40, 50% book. It's so discounted and it never moves up. So when you once at a discounted level, it's hard to get out of that. Like we have seen it with a gray scale close-end fund. You don't come out of this hole. Even like it's Bitcoin and that's Bitcoin, so you should be close to par. It didn't. So only when I flipped an ETF type of structure. I think Michael Saylor is facing that type of problem and risk. And why do I say that? Because he is not. He's just a debacle as a capital allocator. He's the worst guy ever when it comes to allocating capital. The worst guy. Because there's another slide. I did the analysis where I said, and people, the market implicitly gets that. So it's not like people have to run that. So I did the following. I assumed yesterday was August the 11th. 6 years ago, yesterday, Michael Saylor announced a Bitcoin acquisition strategy. And what I did here, I assumed 1,000 random DCA paths. So pretty much 1,000 monkeys or chimpanzees who sort of like decide to invest always the same amount of dollar 100 times between August 11, 2011 until like literally today. Do that. 1,000 chimpanzees. And then you look at like, because some do it monthly, some do it more randomly, and so 1,000 different chimpanzees. And interesting, the average DCA of these 1,000 monkeys is around 50. I don't see that here. Sorry, I might need my my classes here. Is around $52,000. The current price is $64,000. It fits actually very well to DCA, which we showed earlier on. And Seyr is at $76,000. So Seyr is worse than 1,000 chimpanzees. Chimpanzees would have been allocated the equal amount. Now, I show the analysis to people and they say, well, Pius, you don't understand it. He's a genius because he plays four-dimensional chess, because he had to invest when he got the cash. And that was when the Bitcoin price was up. Like, well, no, he was not forced to do that. He decided to do that. or his CEO decided, whoever did that. So what it shows you, and that is priced in more and more, that is horrible, a very horrific capital allocator. Very. If Michael Saylor would have done what an average monkey would have achieved, price of MicroStrategy would be way up by now, because he would be in the money. He's sitting on almost like 10 billion loss. He would be sitting on billions of gains, point one, and point two. He wouldn't even have to issue a lot of debt, if any debt, to have the same amount of Bitcoin. So that's the whole point. So if you really want to have, and that's where my background comes from, if you really want to have an astute capital allocator, and I'm not saying I am one, and I've seen a lot great capital allocator because I was in trading, so I bought and sold to these people every day. That's what the market measures. And he had proven to be the worst than 1,000 chimpanzees. That's, I think, tells something. I sound to be very brutal here, but I think that's something to sink in what it means. And he does it with great narrative and great rhetoric and colorful speeches. And yesterday evening, I watched a speech of his CEO, who's like, I think I'm really shocked. Strategy wants to be the central bank of Bitcoin, everything like, holy smoke, what the hell is this guy talking about? And I think that is very damaging. So I think just like when it comes to capital allocator, factually is horrific. So, and I think that's what the market will figure out, to say, I'm not gonna give somebody money which I think I gonna value accordingly, because I think he's gonna allocate it in a very sensible way. If he had really done what 1,000 people would have achieved, MicroStrategy would be way up, way up. But instead of, like, he got now in a very convoluted capital structure and buying back stretch and saying, I'm never gonna sell Bitcoin, and say, well, the companies is not going to sell Bitcoin. I never said I haven't sold, but I didn't never said the company has. You see, he gets in. I think the best thing is was like, now maybe wait plan. He would just shut the F up, disappear, exchange his CEO, who's a freaking moron in my view, a really complete moron. I've never seen something like that in, like, the way he talks. And just say, I focus on making money here, what I have on the balance sheet, in a hedge fund style of way to make money. That's important. And to say, well, Bitcoin gonna up 100%, 100 times, so it doesn't really matter. It matters for his share price, because otherwise he's gonna end up exactly where Bitcoin Group SE ended up. Bitcoin could go up 10 times and he still trades where it is, plus minus. No, it's a bigger market than people think, but I think it might be different. But when you think about that you are sitting on almost a 10 billion loss, when the average investor would be up billions of of it, but it's just a simple strategy. And by the way, Robin, it's interesting. I did the same stat what you just seen, with the power law as a baseline. Unfortunately, I didn't show that, and I will send it to you after the call if I find it again. And then the average TCA, if you say you don't invest if you're above the power line, would be more in I think, low 40s. So, and I think if Michael Saylor would have just proven to be a disciplined, astute, simple capital allocator, his stock would be much, much higher. Nobody would hate it. I don't really hate him at all. Why would I? I hardly know him. I tend not to, and I get when people write like nasty things. That's like, it's not needed actually. I think that doesn't. It's not helpful. But I think just for him as well to understand this simple thing what he is, and not, I think what's very irritating, and that's, I think, important for Bitcoin as well. We sort of like keep on watching every Sunday what are the dots now doing, or not me, like with Saylor, and then he comes up with a new financial metrics, and that's what I learned on Wall Street. Whenever people come up with new financial metrics, you have to be rather, it's a red flag. It's a massive red flag. So instead, and then that got caught by a gold card. I was like, oh, what happened there? I think Michael Saylor would be better served just to be very simple, very straightforward. I hope he's gonna simplify the capital structure, just redeems all his debt, and tries to have a very simple way to hopefully make a bit of money there. And unleveraged bet, yeah, people can take the stock, it's fine. Then he might have a chance, but to think that's a leveraged bet, I thought the same in the beginning, and I think still there can be a momentum. Market can go crazy for a while, but I don't think if Bitcoin is up 10 times, that MicroStrategy can be up 10 times. That's my view. Could be wrong. I'm happy for everybody who is on the other side and makes money, but I just feel like from the way he behaves, the way he markets, it's he tries too hard. And I think there's too much of his ego involved. And instead of like just stepping aside, saying, I'm not saying anything anymore, nobody's saying anything anymore, and learns much more from guys like Warren Buffett, who did the following. Warren Buffett had never quarterly calls except the one annual call, had once in a while, gave interviews, but seldom as well, and made tons of money for people. That is needed if you want to have MicroStrategy doing well. He does the opposite.
He literally does the opposite. He does like on Monday morning always his filings that he absolutely doesn't have to do. He could do it quarterly or like annually. I mean, the filing I think he probably has to do quarterly, but like he could also just not do the earnings call. I have a lot of questions. I'll start off for the viewers and also maybe for you, just so people know where I stand. I was very much against strategy up until December. Then there's so many people came on my podcast, said strategy is great, strategy is great, strategy is great. Then I was like, okay, I'll just buy some, and I want to learn in 2026 about strategy, and that's what I'm doing the whole year. I'm posting more about it. I'm trying to learn about it. I don't have a strong stance of like agree with me or not. Like I still could see myself selling all my strategy shares. It's a small amount of my portfolio. I have most by far in Bitcoin self-custody, but I'm curious about it, especially as it's the biggest company that has the most Bitcoin currently. As a Bitcoin podcast, I feel like I have some kind of obligation to research them.
Just maybe on that note, I owned MicroStrategy. I lost money on this thing because I used this as like, and by the way, I did that despite the fact that I was in, I think we've been on a conference where I was on the stage and I was very critical. I bought it afterwards and said, well, that's a momentum play. And I lost money. I'm like, holy shit. I couldn't help myself. And I will tell the listeners here, knowing myself, I very likely cannot help myself again. It's like I'm always doing the momentum things. So even though I've done like Michael Saylor's way he runs it, I think everything is wrong with what he does. But having said, I cannot help myself. That's like just who I am. So I talk very nicely about charts and graphs and rationally. I hold a PhD in mathematics. I get numbers easily. That's what got me in trouble on Wall Street. I was a very good trader, but once in a while, like, okay, I cannot help myself. Don't ask me why I do that. I think it's just a lot of fun as well.
I share something with you that I just did on 4th of August. I did it, so like a week or like 2 weeks ago, something like that. I put the share price of strategy and the Bitcoin price into AI from the start of strategy to the 4th of August. So almost 6 years. I think it was like 5 years. I think it was 6 years minus like 5 days or something like that. And I asked AI, please analyze for as long as it takes, as deep as it takes, everything that you can just purely from the price action, like no fundamentals, nothing else. Like what? Just from the price action, what can you read? It was 1,502 trading days, starting from 11th of August 2020. And I found, interesting stuff. Obviously, Bitcoin has the better like Sharpe ratio. First of all, I'm not a TradFi guy. I learned Sharpe ratio from recently. I didn't intend to learn about preferred stocks and what those things are. Like, this all like very new to me. And I did that just to see like, okay, what's the history? And this is what basically came out. Bitcoin is the better asset in general to hold, less downside, better Sharpe ratio. The CAGR is similar, like 33% Bitcoin per year and strategy 39. And this is from the starting. Like, the starting point of strategy might not be a fair point. Maybe we have to find a different starting point. I just wanted to see it all.
No, I think it's absolutely fine because that's objective.
Yeah. And from that point, because it came to my mind because you said like bad allocate on like the high cost basis. I'm like, that's really interesting because he's obviously, like, you cannot debate that, very bad in like buying Bitcoin. He buys most of his Bitcoin at the height of the market because then the MNAV is the most expanded, and then people give him the most money to press the ATM so he can buy more Bitcoin. But still, even today, even we're in this like bear market, even though we're like really low, the strategy return still outperformed the Bitcoin return to this day, which shocked me a little bit. I did not anticipate to see that. And this is the one line answer of like the whole report. And I don't know, it's like has like 8 pages of charts and things. Like, if you want to see it, I can send it to you. But it basically came to the conclusion that Bitcoin overall is the way better asset to hold, and strategy only outperforms in a strong bull run. And there's like one chart I want to show you. This is the most interesting thing that I saw from the whole thing. So if Bitcoin falls, strategy falls more. If Bitcoin is sideways, so flat, strategy is doing even worse. So like a sideways flat Bitcoin is actually really bad for strategy. If Bitcoin goes up a little bit, strategy is basically the same, plus 44, plus 52. I mean, for the extra risk you're taking, that does not make sense to buy a strategy. It's only if Bitcoin goes up twice, 3 times, 4 times, 5 times is where strategy really gains, because I think it's like the FOMO and the momentum and people coming in. So that's the only thing. I'm curious what you think about that. I don't know if you've done similar analysis. I just put all the stock data in there, and the only time it really makes sense to have strategy, according to the data, no guarantee that it will happen again, is when Bitcoin is ripping really hard in a 2-year window.
Yeah, I did a similar analysis, which came out it's like I did a simplified version. Actually, out of what did they use here, Claude or? It's Claude. I did a similar type of analysis, and which not as extensive like that one, more saying, well, take different windows, which I tend to do of like, okay, take the 1 year window for like 2020, 21, 22, the 2-year window from 22, and so on. So you have a triangle, and then you end up, if you do that with 21 entries, you have 21 windows. And in the 21 windows, like you have only one 6-year window, obviously 2020 to 2026. You have 2 5-year windows, obviously 2020 until 2025, 2021 and until 2026. So I did that one. So you get a triangle, and when you do that, it gives you 21 combinations. Out of the 21 windows, Microseed, she did, I think 15 times outperform Bitcoin. But absolutely, it feels the same thing, not lately, because it's more like in the beginning was a massive bull run. So I think the big difference could, of course, be if the minute where his company drops below 1 for good, the MNAV discount, markets can do crazy thing. Then it's almost like then the gas there's not gas anymore. It's like it's not high quality gas anymore in the engine. You have really low quality gas, so it's not really accelerating anymore. That's the way I would see it. It's almost like now slowing down. It's not doing what's supposed to do, because MNAV at 2, 3 was like really high powered gas, high quality, like a rocket. And that seems to like people say I'm totally crazy to say, but that's what comes to my mind. And I've seen it interesting as well in banks. I was working for many, many years in banks. Banks usually trade what's called book value. And you say, okay, decent banks are trading above book value. Normal operating banks trade at like 1 times book. Shitty banks trade at deep discount. And before the financial crisis, most of the banks traded above book. And when there was a rally in bank stock, every bank stock rallied. Then the financial crisis hit. European bank stocks just got crushed. And they traded often at 30-40% book. Europe, mainly German banks, Austrian banks slightly different, better, but are not that much better. And it took literally a whole more than a decade and even longer that European banks crept above 1. That's still, I think, not great. I think even I own bank stocks of European banks, as I cannot help myself. Um, and uh, so uh, so I think that's what you can have here, for the same reason. So that you can pretty much be tracked down. I think we're not there yet. But the longer we are, Robin, in a bear market type of sentiment, the higher is the chance you're gonna drop below 1. And this whole acceleration momentum is gone. But it's interesting. I haven't really seen what you just showed. When I invested in MicroStrategy, it was my instinct to say, yeah, that should be doing its momentum thing. I got freaking crushed on that one. But here, I put in, I think how much? I put in like 0.5% of my portfolio, something like that. Like, well, why don't try? Was like, well, I was negative on MicroStrategy, but was long MicroStrategy. You see, that's what you learn on Wall Street. It's like I can have that view, but I'm forced to do the opposite trade. So here, so misleading if I make markets. I do both sides. So yeah, I think it will have. In my view, it will struggle to repeat that.
Do you have, I mean, I would assume that you probably dislike other treasury companies. So like there's like different treasury companies. There's obviously great operating businesses that just save in Bitcoin. I mean, I wouldn't say that Tesla is a Bitcoin treasury company. I wouldn't say that SpaceX is a Bitcoin treasury company. I'm now just talking about treasury companies that just do this like strategy or strive.
Meta-Planet, Capital
Like
B,
Meta-Planet. Yeah.
Capital B, and then 21 Capital, I think. Yeah, it's I dislike them absolutely. Actually, I dislike them very much, because I think for the same reason that they work on they work on the idea. They work on the idea that Bitcoin just going to go up forever in a very smooth way, and then you apply leverage. I think Bitcoin has a very, very positive and bullish sentiment in my personal view, and we follow the power law. That's my view. So, and if you really think so, and if you think it's a decentralized network following the power law, then Bitcoin should hit 1 million by 2034, roughly 35 range, and 10 million maybe in 20 years. That's what the power law predicts. Can it be half of it? Yes. Can it be higher? Yes. So it's not really like it says exactly it's going to be at 1 million in 8 years from now. But I think when you operate a leverage company like this Bitcoin treasuries companies are, then they operate the minute to take on debt, the minute you take a view of the market. And that is not a good thing if you are in a very volatile market and you can be in a down market for very, very long times. And I think that's something which Saylor learned the hard way. But you look at Meta Planner got totally destroyed, Capital B got destroyed, and then there's the other guy. What's his name? Bailey. Oh, we've forgotten that guy. I think he achieved something which I'm good. This dude was able to destroy 99 point, I think 2%, like literally everything within 1 year. And that's the whole thing. When I dealt in capital markets, so I know capital markets very well. And it's important to be very decisive, to be very clear with your messaging, to be consistent, and to show a track record. Oh, Nakamoto, yeah, that's like, like I don't know what to say to that. Like it's just the guy blocked me on X, by the way. He's not my buddy, it looks like, or I'm not his buddy. Uh,
Yeah, it's down 99.58% roughly in the last roughly 1 year. That's
so
great.
I was too
That's
kind to
salt.
him. I thought it was 99.2, so I was like too kind. And so yeah, it's and this type of stuff is not helpful for the Bitcoin community. That's what I mean. That's like, and it irritates people because Robin, you know more than I do, but yeah, there's a lot of Bitcoiners who really believe in that, but somehow that irritates them. And I think therefore the Bitcoin treasury companies, when you go to conferences like in Prague, and even this year, and especially last year, was a Bitcoin corporate event in Prague. It's all about Bitcoin treasury companies, all about Bitcoin treasury. It's not a business model. I think, it's so much more important to talk about again the originality of Bitcoin, to talk about what happened with Gold Card, to understand people like, oh, I thought like Bitcoin cannot be hacked. No, Bitcoin didn't get hacked. It's like freaking a bad card operator got in trouble because random numbers are not easy to generate. Randomness actually is very tough to get. It's interesting as math guy, so like something I knew when I started math many moons ago. Randomness is not easy to generate, and human beings who say choose random numbers, they're never gonna be random because certain stuff is not like, oh, 10 times in a row, you're going to write down a zero. It's not something natural for you to do. But that happens in randomness. So that's very important. So when you say, I write down one and zeros randomly, it's very likely not going to be random. And when a computer calculates a random number, it's by definition not random because there's like, it's deterministic. And the minute you run a deterministic procedure, it's actually not random anymore. Therefore, there's a lot of sophistication going in the IT areas to create actually randomness. It's actually not trivial. And somehow the gold card guys, either they screwed it up or I don't know, but it was a weird mistake. And sadly, people lost quite a lot of Bitcoin doing that and trusting that. But I think that's just unfortunately, but I think it's necessary as well in a journey that you say you can lose money exchanges, you can lose money with Michael Saylor, and you can lose money here. But ultimately, yes, this is like just a piece of the journey. It's not going to be the end. I think we learned of that. But my point is more to talk about that, more to talk about producing, creating great consumer products. I always write that on X. I think it's important that the Bitcoin world has less Michael Saylors talking and more Steve Jobs type of people. Like there are not many Steve Jobs in the world. I get it, but somehow, I feel we are in a weird situation with Bitcoin. You are like in this Michael Saylor world, like oh, Wall Street, capital markets, derivatives, which I think is not a great idea. And then you think you're on the other side of like this core developer geeks who say, "Oh, it's so special, only I can figure it out." Well, that's a turn off as well, by the way, huge turn off. And like you talk to the guy and you think you're like, you just don't understand. Guess what? If I don't understand Bitcoin, guess what? Then I might be not doing it. And guess what? Then what you're developing is not worth anything. So I think what's needed is great, profitable companies in product development of Bitcoin consumer products. And I have not seen that yet. Everything is very, like even Lightning Network, everything is very cumbersome. It's not easy. It takes nobody gonna watch hours of video things and like what's going on. It has to be intuitive. It has to be simple and secure. Simple and secure. That's, I think, building products around that principle, like Apple-like. It has to be Apple-like products, and I think we are far away from that. And whenever I go to this like events, I don't really see these people on stage just talking about that and dreaming big and what we need. And I think that's very important because Bitcoin is a network, Bitcoin is an infrastructure, a very innovative one, but to build good, robust, easy infrastructure is tough. It's very tough. And I think we take the shortcut by using Michael Saylor, become very rich quickly, or to become the guru, say, "Oh, I'm the Bitcoin core developer," and nobody really knows what's going on. Like, I don't like either side.
We're already like very advanced with the time, but I have one more question just because of it fits in the treasury thing and was an interesting move. What did you think about Jack Mallers stepping down as the CEO of 21 after about, I don't know, was it even 1 year that he was CEO? Like something, I think
Yeah, but
around year.
1 year bit. I think he became CEO in like, I think was it April 2025 or yes, I think April 2025. Maybe no, I don't know Jack Mallers. It was interesting. I was not surprised because I was at the Bitcoin conference in Prague at this event where Jack Mallers asked him the question like Michael Saylor, and that didn't go down very well. I could see that Michael Saylor is a very nervous guy. Like really, like that's usually what I learned in my days when I did business, and you had big trades too. Some of them you had to like in bilateral discussions. You learn much more about the body language. That's what you're being trained to. Don't listen to what the guys say. That's like, how does he move a feet? Is he sort of like getting itchy? That's where you see weakness. And what I could see in Prague when I actually really didn't listen to Michael Saylor. I only watched him. And I always do one game when I get into a situation, and often like, it's like, what's the first word which comes to my mind? That's what I did as well when I met people. I come in the room, don't know them. What's the first? And afterwards, like I was like my colleagues, what's the first word that came to my mind? And when I did that in Prague, I walked in and see Sailor sitting there. It was weakness. The word which hit me was weakness, and, and I couldn't explain why. It just hit me. And Jack Mahler, I think, could smell it. It's like a dog. Dogs smell weaknesses. And I think he hit him. It was a weird situation, so therefore it wasn't surprising that he somehow stepped down because Mahler's really Jack Mahler's asking about an MNAV and actually running a Bitcoin treasury company which is listed is a bit of a weird thing itself. So like, okay, I want to be a bit careful with the SSE when you really don't know how the basics of numbers you're reporting. Now that MNAV is not something which is part like it's not an SC requirement, but nevertheless you better know this type of stuff. It's basic, but I think Malas is a great product developer. And he has good ideas. He's been around for a long time. He's a young guy, huge respect, and I think I like his passion. I like what he has to say. I like the way he says it. I think he is in my book something. Yeah, that's a poster child of like this Bitcoin guy who really believes in that. Who like I think he got tracked in this Bitcoin Treasury company by saying, "Oh, that's a quick rich scheme for him quickly." Like, no, go up very quickly and will become very rich. And derivatives and financial engineering can make you very rich quickly, for but can disappear quickly as well. Product development is much tougher, and I think he comes from the product development side and realized this is like financial engineering, which is something different. Like I grew up in financial engineering, but it's something totally different, and it's less hard. um, I think. So I think I was not surprised that he stepped down and refocused on building products. Yeah, and I wish him all the best that they're gonna do very well. And there are other companies out there building products. But my view is still we need more than like just another Bitcoin-backed loan product. I mean more like a bit like hardware, like a hard wallet, like where things are easy to transact. I think that somehow is missing. Cool features. I think that's a bit that's not there yet. But have I been surprised that he stepped down? Not, I think not really. I think he expected something different. Then don't forget, it was via a SPAC. It was a $10, then it went up, I think, to 45, $50 and crashed down now to like 4.5 or something like that dollar. So clearly, it's not a great reputation as well if you're down a lot.
It was never really like it fitted never nicely. Like when I listened to Malos and when he was talking about Strike, it fitted. It was nice. It was like it seems like a nice fit. The guy with the company and he's building products. He's very focused on what the customer wants. Very focused on new features and all of that. And then with 21 Capital, I'm like, that doesn't. I don't know. It doesn't. Didn't fit well with me. I cannot explain it, but the vibes or like what I got from him, it was never good. I listened to him on podcast when he talked about 21, and I was like, "Are you even sure what you're doing?" Like, it didn't seem like he's very confident about it. It seemed like, yeah, he just got into that and he has to do it now. I don't know. That was my view on that. So it also did not surprise me. People ask me, why don't you invest in 21? And my answer was always, it just doesn't feel nicely. It's a gut feeling that I have that Malice as a CEO doesn't seem like a nice fit for 21.
Yeah, I think it comes down to it's now really a nice way, I think, to wrap it up on that point, because it was like Jack Mallers, I think, is an operator, simple operator. And if you're in financial engineering, financial markets, is not being an operator. Elon Musk is an operator, great products. Um, and Saylor is not a financial markets guy. Even he's not. He's an engineer. That's what he is. And he actually approaches capital market like an engineer. That's not how capital markets operate. And I think that's where he got things wrong. I think it's about capital allocation. It's about making money in a very simple, straightforward way. And that's what capital markets gonna expect and gonna pay you for. And I think is they're not paying you for financial engineering. That's works short term, but not long term. I think that's the whole point. And I think if you run Bitcoin treasury companies, you want to have people like a great hedge fund guy, or you want to have, which are not like again Warren Buffett type of people, like financial markets guy. And if you run operating businesses, yeah, then it's maybe like a Steve Jobs and maybe Jack Mallers is the best thing you can have, but you need more. I think I would advocate we need more Steve Jobs like Steve Jobs to have like minds now in the Bitcoin world to create cool, secure wonderful products.
With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. You get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC-free Bitcoin. That's why I use Simple Mining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control, and I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together. It's the downwards markets. It's the times when Bitcoin is down 40, 50, 60%, where it's the hardest one to get the conviction to actually like buy Bitcoin, but it's also the best time to get into Bitcoin and be a participant in the market.
Absolutely, and it's, as I said, I like equity as well quite a lot, but and I think I don't know whether you can show even the chart. I did not long time ago an analysis saying, well, let's assume you invested in Bitcoin at the all-time high in 2021, back then all-time high, which Bitcoin I think reached $69,000. As of today, we are around $63,000, $64,000. We are below the 2021 high. But let's do exactly what you just said. Keep on investing in Bitcoin. We call that constantly invest the same dollar amount, let's assume on a monthly basis over the years, starting at a high. Where would you stand today? And a very simple analysis shows something very surprising. You do this for Bitcoin and you're doing it for the S&P. Now the S&P 500 is up 60% since then, whereby Bitcoin actually is down 9% since then. But interesting enough, by keeping investing in Bitcoin, constant amount, well, you start off very high, invest $1,000 at 69,000, but you invest $1,000 as well at 15,000 2022, 2023. So you pick up much more Bitcoin at a lower price. And that's a mathematical principle behind. I'm not going to get into that. It has to do with Jensen inequality and so on. But it shows, well, just running pure numbers, you end up almost literally at the same place. It's not totally accurate. The S&P 500 doesn't include the dividends. They have excluded that because the stock, that's not reflected here. But you see, apart from that, you're pretty much up 48% in both, despite the fact that you're down on Bitcoin from an all-time high. Why is that? Because, as I said, the volatility actually and the massive drawdowns are actually working in your favor if you do not lose conviction and keep on doing the same thing over and over again. And as you see, S&P 500, you would have guessed, gosh, this is 60% up. Why is it that I'm only up on the whole all investment 48%? Well, because you pick up a lot of S&P 500 shares at a high price. It's not really volatile. It's sort of like, yeah, it swings a bit, but it goes on along a trajectory. Like clearly there are like drawdowns and days down 1.5%, 2%, not that many, but it's sort of like moving upward. So I think that's very, very important, I think, chart. They like to convince by numbers. And I don't think a lot of people get that. I think a lot of Bitcoiners I'm aware of that do it intuitively right, which is great. But I think that's a very powerful chart. And what it shows as well, of course, uh, your portfolio would have been worth a lot at a high, but hey, it's still you're not you didn't really underperform the equity market.
I I see those charts and I think to myself more and more, even though I haven't done it so far, and I'm thinking of doing that going forward more, of looking at different models like the power law, like the 200-week moving average, no matter like what you kind of want to look at, and see a more weighted DCA of like if we are below the trend line, for example, in the power law, or like we are close to the trend line, it's a higher DCA. And if we are far away from the trend line, we are maybe just like investing in other things, or even stacking some dollars, because what Bitcoin has taught us so far, there will always be a crash. Maybe that changes over time and Bitcoin gets more mature, but right now, I think we're still very early where we'll rush back up and then we'll have a crash again. And so you kind of want to have cash sitting around when there are opportunities like we are seeing right now, because right now everyone is saying, "Oh, like I don't have anything left to invest because I bought the dip, I bought the dip, I bought the dip," and the dip is keeping on dipping. It's like, how do you think about weighted DCAs and strategies like that?
Mm, Well, yes, I think I did an analysis where I showed the weighted average cost if you instead of using a constant DCA, what that chart shows, where I assumed as a baseline the power law and say, well, if you exceed the power law line, then you don't invest, then you stay out of the market. And of course, that helps a lot to reduce the overall cost base. Like that's, I think, works very well. But Robin, I'm a believer in like keeping things as simple as possible because like the minute you start having different models in your head, you get confused and you say, well, but that happens or that happens. I think at the end of the day, you say, well, I keep on investing the same amount. I know roughly every month how much I have. I don't really think very hard about that. I don't really pull up the power law. And I think that's often what I've seen in my life, and I'm a 58-year-old and old, folks, an old man, is that the minute where you get involved in complex decision making, you end up usually in a very not in a very good place. I think simplicity is key. Therefore, the DC8. Now, I will be very candid for like your people who watch the show. I'm personally not in equity, no Bitcoin, no whatever I do. I'm the anti DCA guy in my own life. I have, apart from Bitcoin, I have a highly concentrated portfolio. I don't believe in diversification. I tend to be all in on a stock, the same amount, and then crash and get frustrated. But that was my trading style professionally as well, and I got often flagged badly. So I'm not a believer in hedges, which got me into a lot of trouble with risk management of banks, because I believe in conviction and say, okay, just like this is now, but I think it's a good price. I might lose. Now you have to convince your higher up. Why did you invest at that price? And now you're crazy. But I learned that's my style, and that is something that just fits to me. I like to blame only one guy, and it's usually me for my mistakes. And but again, I know the charts. I know what would be superior, but that's not my temper. It's like that's not what I do. But having said that, if you really say, well, you want to have exposure to Bitcoin, you want to do it in a safe way to get in, DCA in the most simplistic way, I think you cannot beat that. It's true for stock market, but especially true for Bitcoin.
Yeah, I think that's I think that might be a good chance to show this other picture that you've shared with me. It's like having that long-term view over time, because then it really doesn't make any difference when you start investing in Bitcoin if you just have a very long time horizon.
Yeah, well, that is something I shared with people. I got a lot of As you can see, it was like a very heated feedback. Not only positive, because people said, "Pius, what are you doing? That you actually support the bad mullah regime in Iran," which I'm not. Like I'm not doing that. I don't want to be political
I,
here.
I, I love how people see that picture and and blame you for
Yeah,
that. And
yeah,
they say,
they get
even
like
that picture,
totally
there's no
nuts.
connection with that.
I have no, I, if people know my political view, they would say I'm the opposite of that view. But uh, here, what it shows is like clearly what the various things. And I think that's what I would like to see from Bitcoin. I think that's now the core I would say for my belief where Bitcoin should be. In 2010, I think there's 10,000 Bitcoin, which bought back then 2 pizzas. I think was a transaction between New York and London. And you say about that was the purchasing power of Bitcoin back then. And today, well, it was not, of course, a super tank of oil. It was pretty much the fee for oil passing then the Straits of Hormuz. Interesting, the following was that the Iranian regime figured out first they say, well, you can pay us in any token like stable coin and Chinese currency, not dollar. But immediately then they flipped in the announcement, say, well, no, Bitcoin. Because somehow they flipped, they understood like, well, stable coins are backed by, let's say, dollar, and suddenly you're in the regime of the United States again, and they can shut you out immediately. So they figured out Bitcoin is the most sort of like independent money you have out there. And I think that is a powerful message with that. Now, as I said, it's not a political statement here. It's more, I think it's very important, and that I think got lost during the last 2 or 3 years. And whenever we went to when I went to Bitcoin conference, it was like, what is the original idea of Bitcoin? And even from the white paper, it's a peer-to-peer network transferring effectively value, money peer to peer, and I think that's something I'm come out of, at the camp to say in the camp of like, if we are not able to use Bitcoin in our daily life in even little things, then Bitcoin will fail. I actually am more and more convinced of that. If we believe we can create an inflated price of Bitcoin by applying, and that's not my market, financial engineering, that's not going to work out. It never worked out. And Wall Street never did. There's a story, it's narrative, it looks great, and then it collapses. That's just the way it is. Bitcoin so far has always been very, very resilient. But I think it's very important as well to come back to the original idea. What was the idea? Say, how can I transfer value from A to B without having a third party in the middle? And Bitcoin is really doing that. And the great thing as well is Satoshi walked away. That's so powerful as well. There's not this one guy that, well, I'm still here, I'm the big guy, I'm invited at every conference, and maybe he is at every conference and we just don't know. Maybe he's that. I'm not gonna speculate here, but that was a genius move to say, it's I let it loose like something in the green field. I just let it loose and now run. Do whatever you can do. And I think we have seen lately too many people who try to be in front of Bitcoin, build their persona and their ego, and we can have different view. I've been very critical of Michael Saylor as well. In the beginning, I thought like, oh, it's an interesting idea, great idea. No, I'm coming out on the totally opposite side. I think it's important to come back to the original idea. For example, how can you use it in daily life? Just lately, and that's a very practical example. I had dinner in London with a friend of mine who is a very very senior banker at a major investment bank, like literally one of the top guys. And we had a good dinner and drank a lot. And at the end of dinner, I said, okay, listen, we do the following. We talked about Bitcoin and stable coins and blockchain and all technology. And he's a very, very, very innovative and clever man. And I said, listen, let's do the following. do you actually own Bitcoin? Like he said, no. Did you ever do a Bitcoin transaction in your life? Like, no. Like, you see, you bankers talk about this whole thing. You clearly don't care a bit. Now he is different. He's a he's a very curious man, a good friend of mine. I said, let's do the following. Why don't you pay the bill here, and I pay you my part of the bill or a bit more, whatever is needed, with Bitcoin here? It's like, what do you mean? So no, no, let's take out your mobile phone, you load it down Blue Wallet, ask the guy, the waiter, come here, write down the 12 seed phrase, write it down here, remember. Okay, and now I wire some Satoshis, so explain to him what is Satoshi, what's Bitcoin, the units, 100,000 Satoshi is a Bitcoin, or 100 million Satoshi is a Bitcoin. He was intrigued. He was intrigued because we watched it in live. I went with him to the main pool and said, listen, it's just going through here. And then it popped up here on his side. You see, that's the way. Suddenly, now he has Bitcoin to spend. I transferred. That's missing in our daily life. It doesn't take crazy things and crazy new cool products. Just simple conversations. Say, I pay it, and next time you go somewhere, you can share it that way. And he was highly intrigued and was very intrigued because he's a banker and he's a technical guy. He knows as well how screwed up infrastructure of banks are. And he was intrigued that, like, just sitting there, he can watch it live, no guy in the middle. I transfer value from my wallet to his wallet. I think that spirit, I feel, has been lost and has to come back, instead of saying, well, how many bitcoins does everybody has, and then count like the value of each guy and who is more important. I think that went, in my view, far, way too far.
Interesting. I mean, it's I think it's very clear that I mean, there's two different points. There's like the sovereignty aspect of Bitcoin in there, with a nation state realizing, hey, I don't trust the other nation states, so I want something that they cannot control. Aspect like the sovereignty aspect of Bitcoin, which I think is extremely important. And I think in the world where different nation states are don't trusting each other, they're more and more incentivized to adopt Bitcoin in certain ways, because they're like, I don't want to have the US dollar. My own currency is shit. And those other currencies are also bad. And gold is very impractical. So I'm like, okay, at some point they might discover Bitcoin. And I think we are a little bit away from that, but I think we get there. But the other aspect of like you have to spend Bitcoin, and I think Jeff Booth was it Jack Dorsey? One of those two was got really famous for saying, if Bitcoin doesn't succeed as a mean of exchange, it will also not succeed as a store of value. Is that kind of what you're trying to say?
Absolutely, I think it was Jack Dorsey, um, and I agree with him completely. Uh, that is because Bitcoin ultimately, I think, started off almost like the idea what money is. Anyways, there's always this discussion, what is money, and people become very philosophical around that. I really did read the original paper of the um, of the Austrian School of Economics and the original founder, and to say, well, how did I think about money? And these were journalists. And Karl Menger was actually a journalist, I think, on the stock exchange in Vienna, like 1870s, and he thought about money and exchanges, and he was the guy who came up like medium exchange, and it has to be recognized by people that they can exchange value for that. And it's usually comes out of actually community, not by government. And I think if we really use the definition and the way to think about money, how Karl Menger did, I think that the one of the key brains behind the Austrian School of Economics, then Bitcoin qualifies for that. But then when you see the evolution of Bitcoin, or suddenly like HODL, I don't want to sell, as well the idea of like we are superior to fiat, everything there is stupid, we are clever. I don't think that serves it very well. A, it creates jealousy. B, it only helps a few guys. So hopefully Bitcoin gonna go to the moon, and I'm still very, very bullish on Bitcoin. Hasn't really changed my view on that one. But I think it's important as well that Bitcoin world has to come back a bit to the old understanding to say, well, we have to be able to use it. And I understand people will say, oh, but shops don't accept it. This doesn't accept it. But I just explained a very simple transaction. I don't have to have shops. I don't have to have infrastructure. Things don't really pop up like that. It happens very simple, like as with my banker friend. I say, yeah, we share a meal. I buy you Bitcoin, and we have a nice discussion, and we use it to talk about Bitcoin for half an hour, and that's the best advertising you can do actually. And now he might do it himself, and now that's where you get actually the impact. And I think I would even argue when, for example, let's look at the Bitcoin Treasury companies. If only instead of having the Bitcoin Treasury companies having a small percentage of the people say all this better, like being in a situation where only instead of having the Bitcoin Treasury companies around, only a few percentage of the guys invest in Bitcoin directly in their wallet, I think that would serve the Bitcoin community and even the price ultimately more than all this financial engineering, leveraging up and trying. Like and then suddenly Bitcoin is about like, oh, what's the MNAV and what's this number? And, like now we talk about like where I would say that actually is the proof where actually fiat money has won because now we are in their territory, which I like. That's where I'm scared because Bitcoin is still like a little plant. It's like the market cap right now of 1.3, I think 1.2, 1.3 trillion, which is like it's nothing in the capital markets, and therefore I think it's very important to come back to the original idea because that creates a very robust network, and I think and makes it bigger and stronger, and getting away from like a price point and getting away from the idea there's no mean to become ultimately super rich because I think that will happen then anyway that they become wealthy, but just start with the origin idea.
I have so many questions. The first one I'll try to tackle on is, isn't the store of value thing before we can even get to medium exchange of like isn't it like a normal behavior now of humans to try to more hoard it instead of like already spending it because it's still like a new idea and like they still discovering it and seeing if it's a good store of value and it's still very volatile is then the medium of exchange just coming naturally over time when Bitcoin matures more, is getting more stable.
No, good question. I think you've always is it actually the first thing, is it really that volatile? People say, of course, it can crash by like 20-30%, or like now it's down 50% from the all-time high. But when you really zoom out a bit, like Bitcoin moved up from 60, 70, 80,000 to 126,000 quickly. And then like somehow when you really zoom out a bit, it's actually not that volatile. Point one, I would say. Point two, um, I'm as I grew up in Germany, left Germany more than 25, 26 years ago. But when you grow up in Germany, then you're like exposed to the idea of like hyperinflation, 1923. But something which people don't really know, Germany didn't really have a currency after the Second World War until like 1949, I think. So there was literally not a currency. Like, no, so how did they live? Actually, they started building up Germany, West Germany, even West. How did they do that? Because it was mainly barter with cigarettes, mainly US cigarettes, like they were trading in and out. That was the way you start like exchanging ideas. And that's, I think, that is the original idea to create wealth, to say, I have a medium exchange. And now you say, why should Bitcoin do it? No, I think it's more two things. It's a medium exchange, but coming from a different angle. It's not, if we were to live in a world where we wouldn't have any debt, where everything feels like absolutely clear and safe, we wouldn't have any war. And now I become political. We wouldn't have any Ursula von der Leyen. And there would be no European Union. Now it's really political. And now I just say it. And you really feel like you're living in, like, I would say almost like Germany in the 80s, where it feels like very safe, very wealthy, where you feel like you make good career, you make decent money. Yeah, there's tax involved, but somehow you feel as well the parties that tend to go a bit like with your ideas. I think we are living, and I'm much older, we are living in a totally different world nowadays. And it almost comes back to the idea of freedom. Because in the 80s, 90s, you went to a bank didn't ask you where did you get the money from, how do you want to spend it. Like, I would have said, my father, unfortunately, is not alive anymore, was like, are you freaking crazy? What the F are you talking about? Are you nuts? This is my money. Well, today he would say, because he was extremely, as a farmer, extremely sharp guy, was really switched on and could read people well, he was like, obviously, it's not my money. It's his money. He wouldn't be like, it's his money. It's not my money. Like, this is a joke. He would have read through this whole thing in a nanosecond, but we somehow get confused. Bitcoin is your money. Bitcoin is freedom money. And I think that's the narrative people have to understand as a medium exchange. And then the store of value will appear naturally when they see, well, no, that I know, and today I might be a bit angry. There will be a lot of smart asses now out there say, well, but it's not really a totally anonymous transaction because you can see it's very public. Of course, I understand that if you once go to an exchange and then you can see who is the name in the ledger, I get all that. But it's meaningless. It's still very powerful to say, I can transfer value to you. And effectively, if I never go back to an exchange, guess what? At some point, I give it to you, Robin, you give it to another guy, and then like, that's what you want. That makes it robust. That makes it a very weaved web, and that's freedom, I think. And that's something more and more people, I'm convinced, see that. Not just, I think in Europe especially, that the world became much smaller, more strict. Cross borders are not that trivial anymore. And to say, well, I have something which is Bitcoin, it's freedom money, and I can exchange it at any point in time. If I want to have somebody doing something here, then I say, listen, I give you Bitcoin. Now I hear already people say, oh, what's about the tax? Guess what? That's anybody's own decision what he does. I'm not asking people to do tax evasion, but I'm not telling them as well, fill out a tax form. Like, do whatever you feel right. Like, that, I think, is the point, that people take the destiny in their own thing and then say taxes are high and this is not. No other person gonna take care of your life. Only you. And Bitcoin allows you to take freedom decisions back in your own hands and do with that whatever you want to do. I think that's the power of that. And I think that message got lost.
And I think that the taxes, I get angry with the tax thing because if you hold, let's make the experiment of like, if you hold Bitcoin instead of the US dollar and you spend the Bitcoin and now you have to pay capital gains tax on that, that means you made a profit compared to holding the US dollar. That means you are like, you profited from holding the Bitcoin instead of the US dollar up until the time you spend it. So the capital gains tax is of course bad. If I would prefer there's no capital gains tax on Bitcoin, obviously. But if you use Bitcoin as money, you only pay the capital gains tax on a gain. And
Absolutely.
so,
And ultimately, it's more just and let's assume and I always paid my taxes in my life, and maybe I think even too much on that. And not only in one country, in various countries in my life where I lived. Um, and by the way, in the U.S., where I paid tax, still actually do, but like paid for many years. Bitcoin is not tax exempt. It goes through the capital gain tax regime, short term. It's actually treated exactly like shares. So on that one, the U.S. tax code is so like quite rational. They say, well, you have an asset, and it goes. There's not like an exemption for that one. But absolutely, I would say, if you keep spending it, two things. If you say, well, you never sell Bitcoin, then there's no tax exempt, no tax event, except you are living in Holland. That's gonna change there. But these guys really turned into a socialist regime over there. But hey, that's that's everybody. Like, but it's not true in Austria. I think it's not gonna be true in Germany. I know there's a lot of debate, and in the US and other countries. But if you keep on using it, and if you're a honest tax guy, and as I said, people should be doing whatever they think they should want to be doing. But even that, I think if you really run the Excel sheet and it's fully automated, you will see at the end of the year, it's a wash. You had gains, you had intraday losses, and at the end of the day, it doesn't really make a difference. Because you will have realized you will have some Bitcoins as well where you lost money. No, it's an offset against the gain money. So I think at the end of the year, if we really use the exchange, there's no difference. It's going to be not really a tax event if you have a very good app to use it. So, but that's not the technical point. I really say very simple. Like, I think people should be just using it. Teach other people when you go out in the evening with other friends. I will actually now go out with a bunch of young boys. Actually, they're just here with us, and I think then we're gonna have a little dinner, and that's I'm gonna do the same thing there. I said, listen, I gonna that's I gonna pay each of you guys a little, and you make the payments to the waiter. And so you can talk about them. None of them is a Bitcoiner, by the way, as far as I know, yet. Maybe after tonight. And I think that is very important. And then on top of that, what I said is that we learn to measure things in Bitcoin. I think that's so critical. I had a very long dinner actually with another guy who with the CEO of Roxxon. You know, it's like the platform in Argentina. Extremely smart man. And he really said it's so critical that he has an exchange. He built an exchange where actually you can trade Tesla, you can trade SpaceX, but against Bitcoin. And for example, you can even buy, even I personally don't like the product, but here, everybody can do it yourself. You can buy Michael Saylor's Stretch, and dividends is being paid out in Bitcoin. And I think that's a very important evolution to say, well, you have Bitcoin, now it's an exchange which measures actually stocks in Bitcoin. I think not only just a medium exchange, as well as a unit of accounts that you start thinking like, how much is a coffee in Bitcoin? Oh, it's like roughly, maybe it's like 4,000 or 5,000 satoshi, something like that. That people get used to that, and ultimately, I think that's not something you're gonna happen overnight, but I think that's part of the journey.
It's a very good point. It's a great. I think it's a great end to our podcast today. But before we get end, as you know, we have a end routine in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest is. The previous guest asked you the question: how would your life change if Bitcoin wouldn't exist anymore?
Mine wouldn't actually change too much, to be frank. It wouldn't, because I was at this curse, and it's maybe a favor as well. I'm 58 years old, so so when I got exposed to Bitcoin, I was already again 40s, early 50s. So I was an old man already. So therefore, for me, it was more like it's a wonderful experience, and it can make a big change in the future, but currently wouldn't make a big change.
I thought so too. That you will say something like that. Thank you so much, Pius, for being on the podcast. I will link the Twitter from you down below. That's, I think, the best way for people to follow you and reach out to you. Awesome. And thank you so much, Pius, for being on the podcast. And also thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back. This content is for educational and entertainment purposes only and does not constitute financial advice.